Hey everyone, welcome to this explainer. Look, let's just jump right in, because today we are zeroing in on something absolutely crucial for anyone trying to build serious financial momentum.
To really understand this frustration, we have to look at this incredibly blunt quote from the legendary investor Charlie Munger. The first $100,000 is a bitch.
The invisible wealth barrier. Why the first 100K feels impossible. What I absolutely love about Brian's approach in our source material is that he skips all the confusing economic theater. He cuts right through the jargon to reveal a pretty uncomfortable truth. The government is actually using hidden siphons to stall your wealth explosion before it even has a chance to begin. That invisible barrier keeping you from your first 100 grand, it's not bad luck, it's by design. CPA Brian calls this invisible barrier the compound wall, and we aren't just talking about normal market forces or inflation here. The compound wall is a literal wall of hidden government fees and specific 2026 tax traps designed specifically to stall your financial growth. It creates this vicious cycle. Just when your money should be compounding and growing on its own, these hidden traps siphon off the top, resetting your progress and keeping you trapped in the grind. The 2026 compound wall, understanding the macro context. Okay, to dismantle a trap, we first have to understand the mechanics behind it. I want you to just let this massive number sink in for a second. $39 trillion. That's the national debt. When you've got a massive looming debt like $39 trillion, the government urgently needs revenue. And where does that revenue come from? It comes from siphoning money out of the economy. This massive number is exactly why the government needs to find quiet, hidden ways to take a little bit more from you. They have to service this debt, and unfortunately, your hard-earned net worth is one of the primary targets. Because of that immense debt, the system essentially relies on you being a sitting duck. Look, they don't do this through massive, sweeping tax hikes that everyone would instantly notice and protest. No way. They do it through simple, seemingly harmless paperwork errors. They rely on you just not noticing the nickels and dimes being siphoned away, assuming you'll just accept the defaults and remain a sitting duck. 3 hidden tax traps, the siphons draining your grind. Alright, so now that we know the system is rigged to siphon your wealth through paperwork, it's time to get tactical. Before we dive into the specific traps keeping you from hitting that wealth phase, let's establish a really simple 3-step mindset. Step 1, identify the hidden trap. Step 2, fix the underlying paperwork error, because remember, at the end of the day, these are just administrative traps. And Step 3, reclaim your explosive growth. We're going to stop letting these nickels and dimes drain your net worth. Honestly, it's a highly solvable problem if you just follow these steps. According to CPA Brian's research, these are the 3 main culprits making up the compound wall: sneaky W-4 penalties, 1099-B cost basis errors, and missing employer matches. Let's do a rapid-fire breakdown of how each of these actually operates so you can spot them in your own financial life. Okay, trap number 1, sneaky W-4 penalties. This is a classic example of a simple paperwork error that totally stalls your progress. Your W-4 is just the form that tells your employer how much tax to withhold from your paycheck. But if you fail to update or fix your W-4 to match your actual tax liability, you could be significantly under withholding. Then, when tax season rolls around, you aren't just hit with a surprise tax bill. You're hit with sneaky underpayment penalties. These penalties quietly eat away at the cash you could have been investing, acting as a massive headwind against your wealth creation. Trap number 2 is the 1099-B cost basis error. So when you sell an investment, your brokerage sends you, and the IRS, a 1099-B form. This form is supposed to report your cost basis, which is just how much you originally paid for the asset. You're only supposed to be taxed on the profit. But here's where the vicious cycle kicks in. Brokerages often make errors, or they just leave the cost basis blank. If you don't catch that missing cost basis when you file, the IRS assumes your original cost was 0. That means they'll tax you on the entire sale amount, not just the profit. It's a huge paperwork error that causes everyday investors to wildly overpay their taxes, literally siphoning thousands of dollars straight out of their net worth. Now let's talk about trap number 3, missing employer matches. While the first 2 traps are all about the government taking your money, this one is entirely about you leaving free money on the table. If your employer offers a retirement match and you aren't contributing enough to capture the full amount, you are missing out on an immediate, guaranteed return on your investment. In the context of scaling that compound wall and reaching the 100K milestone faster, missing your employer match is a critical, devastating leak. You're basically trying to climb a wall with one hand tied behind your back. So you essentially have 2 different financial worlds you can live in. On one side, we have the grind. That's the phase before you hit $100,000. This phase is characterized by everything we just talked about: government siphons, simple paperwork errors, and sneaky tax penalties just holding you down. But on the flip side, we have the fortress, the state you achieve after hitting that 100K milestone. According to the source data, once you cross that threshold and stop the leaks, you enter a phase of explosive wealth. The vicious cycle breaks, compounding officially takes over, and the mathematical principles of investing finally start working for you instead of against you. Building your financial fortress. Actionable steps to make the math work for you. So, how do we actually get from the grind to the fortress? Well, here is your exact checklist derived straight from the Hidden Tax Insights. First, you've got to fix your W-4 right now to stop the sneaky underpayment penalties. Second, meticulously check your 1099-B for missing cost basis information so you never ever pay taxes on money you already owned. Third, adjust your contributions to capture 100% of your employer matches. On top of that, you need to actively utilize pre-tax buckets, like health savings accounts or HSAs, to shield your money from the system entirely. And finally, pour all those savings and reclaimed funds into broad index funds to harness the true power of compounding. These specific paperwork fixes and pre-tax strategies, they are the exact building blocks of your financial fortress. Which leaves us with one final, totally crucial question. Now that you can clearly see the invisible compound wall, how will you build your fortress? You're not a sitting duck anymore. You know exactly how these hidden 2026 tax traps operate, and you know how to fix the paperwork errors that cause them. It is time to stop the drain, escape the siphon, and keep the math entirely in your favor. Remember, as CPA Brian says in our source material, we are rooting for you to break through that barrier and achieve that explosive wealth. Thanks so much for joining me for this explainer, and I highly encourage you to start implementing these steps today.